Hi everyone, it's Vangeli Kollias from VK Financial, your finance teammate, and in today's video I'm going to talk about the differences on whether you should purchase your first home as an owner-occupier, so to live in the property, or as an investment property. Now this video is not financial advice, so please seek financial, tax advice, legal advice elsewhere. It's just a comparison of the first home and an investment, and I'll relate it back to my personal story of purchasing my first home back in 2021. If you want to see the full video of that, it is on my YouTube channel, but yeah, let's get into it. So purchasing your first home as an owner-occupier. So what are the benefits of purchasing your first home as an owner-occupier? Now, I am based in Sydney, New South Wales, so I'll speak on the benefits of the New South Wales government benefits alongside the Australian benefits of purchasing your first home. But for your own state eligibility, I can do a video on that later on, but seek your state government website and look at the first home buyer benefits there. Now, as a first home buyer, you are a first home buyer with restrictions. Now, that means you have to fulfill certain eligibility requirements in order to utilize Australian and state government benefits. The first one is the first home guarantee, the 5% deposit, no lender's mortgage insurance as a first home buyer. Now, there are 35,000 spots available nationwide, and we're recording this in April 2024. So this could change on July 1st, just depending on the federal government, but there are still spots available with some major bank lenders, so not all top bank lenders, and a whole heap of second tier lenders have spots available. So unless you apply through the first home guarantee scheme through those specific lenders, you can then reserve your spot and get a spot in the first home guarantee scheme. Now, LMI is lender's mortgage insurance. It's an insurance that you have to pay to the bank in case you default on your home loan, and this is usually added onto the loan amount. Typically speaking, banks want to see a minimum of 20% deposit to avoid LMI, as you're classified as a lower risk borrower. Now again, you'd save about $20,000 worth of LMI purchasing with a 5% deposit down a normal lending route, so it's obviously a big benefit there. But the eligibility requirements are as follows. You have to be an Australian citizen or permanent resident. That was a new spot opened up this year. You have not owned a property in the last 10 years. You can purchase now with a sibling or a parent or a family relative. You have to be at least 18 years of age. Now, the kicker is that you have to earn no more than $125,000 as per your notice of assessment as a single, and as a couple collectively can't earn more than $200,000 in that given year. And finally, in Sydney, New South Wales, the property price cap is $900,000. Now, there are a whole heap of property price caps depending on your state. So again, I think it's at the National Housing Institute website. Just type in first home guarantee in Google and you'll see all the property price thresholds for your specific state. It's also different for regional centres and major cities like Sydney compared to somewhere out in regional New South Wales. And the final eligibility criteria is you have to live in the property for the first 12 months. So they're the eligibility requirements of the first home guarantee scheme. Now, the second benefit you get as a first home buyer in New South Wales buying your first home is stamp duty exemptions. So stamp duty is a government tax to purchase a property. Now, this is applicable for all property purchases that you make in New South Wales, or nationally, I should say. So whether it's your first property, your 7th property, your 100th property, you have to pay stamp duty on those purchases. Now, if you're purchasing a property in New South Wales, your threshold is $800,000. So any property $800,000 or less, stamp duty is exempt. Purchasing as a first home owner-occupier, so to live in the property, right? From $800,000 to $1 million, you get what's called a concessional stamp duty or a discounted stamp duty rate. So you don't pay the full stamp duty cost in that bracket, but you pay a discounted rate. And then from $1 million and above, you pay full stamp duty. Now, the final piece of the puzzle for a first home buyer is not actually a government scheme by any means, but it's a lending policy that you have to satisfy. And this is what's called genuine savings. So genuine savings is your ability to save and hold money for a given period of time. This shows the bank that you're a good saver and that you can save a minimum of 5% deposit over a given period of time, typically being 3 months. So for example, if you're buying a $600,000 property, you would need to show the bank that you could hold and save 5% deposit, or the 5% in genuine savings, which is $30,000, and that has to be held in your account for 3 months. So if you're going for a pre-approval on May 1st, you'll have to show from February 1st that you have $30,000 in your account held in there for that given period of time. Now, so from February to March, March to April, April to May, there's your 3 months. There are some lending policies that can do it for 1 month, but again, it's depending on if that lending policy fits your circumstances or not, but it's always a range from, most of them do 3 months genuine savings. And that's crucial because, you might have your 5% deposit, but, if you haven't saved that over 3 months and you're not going to be eligible for that lender, and you potentially have to wait longer down the track. So there's the benefits of purchasing your first home as an owner-occupier. And if you're buying in Sydney or buying in New South Wales, that's also another benefit with stamp duty exemptions as well. So that's buying your first home as an owner-occupier. Now let's look at buying your first home as an investment. Now, as an investor, you have to pay full stamp duty. You also don't get access to the first home guarantee scheme because you're buying it as an investment property, so you have to pay LMI. But the biggest advantage of buying an investment property is that you get rental income associated with your serviceability. So it actually increases your capacity, potentially giving you the ability to borrow more money and to purchase at a higher price point. So for example, if you're looking to purchase a property, you're living in Sydney, you're looking to buy in Perth, and the rental income is $500 a week, well, then you're going to be able to add $26,000 a year of gross rental income to your capacity. But you also have to factor in a post-settlement view. So when you purchase a property and when you settle on the property, where would you live afterwards? Now, if you're renting, you have to add your rent costs in there, but say you're living at home with parents, you have to add what's called notional rent. The banks have to factor in this expense as a worst case scenario. Typically, this is about $500 a month, with some lending policies as a couple or as a single applicant, or could vary to $650 an applicant. Now, again, the biggest strategy with investment properties or with buying investment property is if you're looking to always upsize in most cases. So in Sydney, the house prices median price is 1.3 mil. Again, you could buy a house price interstate for far less than that. And if you can, for the price of a property you can purchase here in Sydney compared to buying a house interstate, that's the big advantage with buying investment property, is that if you can upsize in another state, you pay your full stamp duty, but you get potentially more equity over the life of that property to cash it in and use that deposit to buy a house here where you're residing, or use the equity and buy a house here without putting any savings in. So that's sort of the big advantage or big strategy that I think most buyers agents will utilize if you do go down that route, purchasing an interstate property. But again, go seek a buyer's agent if you do have a budget and you're looking at interstate that you don't reside in, then that's the way I would probably ask for those sort of discussion points there. So that's the investment property strategy side of things. So now I've spoken about buying your first home as an owner-occupier and buying it as an investment. And now I'll explain the differences between the two, and I'll utilize my personal story as well. Now, again, as a first home buyer, like I state, you have these benefits as restrictions. It's great benefits as a first home buyer. You're getting into a property potentially with 5% deposits. You're potentially getting in with no stamp duty depending on the property price. And if you have your genuine savings all saved up, it's a great strategy to get into it. The next benefit is that owner-occupier loans, so buying a house to live in, that loan is typically cheaper than an investment loan. So, you have the same loan amount, owner-occupier, investor. The owner-occupier loan is going to be cheaper, interest rate's going to be lower, and typically speaking, you'll pay less interest over the life of the loan. So the third benefit, which I don't think is talked about enough, is that as a first home buyer or as an owner-occupier, you have a place to reside in, pending your circumstances change. And when my circumstances do change, for example, getting married and I need a place to stay, I've got a place here in Sydney that I can move to. If I had an investment property interstate, I couldn't move into that property unless I picked up my whole life and moved it over to another state. So that's a big benefit. Now, the benefits of an investment property. Now, the benefits of an investment property is that you're leveraging buying a better property type in another state, which is going to have more potential to give you an equity uplift compared to buying here. So the median house price in Sydney is 1.3 mil. You can buy a house for much cheaper than that interstate. Again, historical data, it's not financial advice, but houses do grow in value more than apartments. So if you can only afford an apartment here in Sydney, but you can buy a house interstate, well, that potential equity uplift is going to be greater than it would be here. And eventually, like I've explained in my last video, and I'll explain it again, that extra equity you make in that property, you can cash it in and use it to buy a house here, or use that bigger deposit to buy a house here, or you can just draw the equity out of the property, pay the mortgage on it, and not actually tap into your savings and use that as a deposit here as well. So again, that's the potential of buying investment properties. To buy a better asset, you can potentially see more returns on it. Again, speak to a buyer's agent on these sort of things. They're the best type of professionals to speak to when buying interstate properties. They have sort of all the tools available to them. And so if you do have a budget as an owner-occupier or as an investor, you know, when you see your broker, ask for 2 options, and then you can work out your strategy from there, because you might forfeit your first home buyer benefits. You might want to pay your stamp duty and get a better property type interstate to be able to leverage that later on. As well, like I've spoken about, the extra rental income helps your serviceability, and again, you're able to borrow more because you have that extra income. And so that's a big benefit when purchasing an investment, is that extra rental income, considering, you know, the rent prices at the moment, is going to help with your capacity. It's also going to give you extra money in your back pocket, pending that the property is netting positive cash flow. Now the final part is to relay it back to my personal story. So it's on my YouTube channel of how I bought my first home, but I bought a 420k townhouse in Sydney. I used my first home buyer benefits, stamp duty exemption, and 5% deposit. I have rented it out just recently, so now it's an investment. Looking back on it, could I have bought an interstate property for that price? Could I have bought a house interstate, and would I have made more money on that than what I have here? Probably. Whether I would have made more money or not as an investment, I've bought an asset. And that's the info I want to sort of relay to you guys watching this video, is whether it's a first home, whether it's an investment, you're buying an asset. You're buying an asset that's going to appreciate in value, that when you're paying down your mortgage, that you're going to increase more value by paying down your mortgage, and you're going to hope that it increases in value organically, and then you can leverage that later on as you wish. For myself, if I have a 2-bedroom townhouse, so again, if I had 3 kids or 4 kids, I wouldn't be able to fit them in a 2-bedroom townhouse. So if I wanted to sell that property, cash in the profit that I've made, and purchase a bigger property here to move into or to live to, well, that first asset has done its job, it's made its money, and it's helped me leverage at a later point in my life. And whether you do that for a first home, whether you do that for an interstate property and you leverage that equity or you cash it in, that's the best sort of tip I can give you, is that whatever strategy you pick, it's an asset and it has to work with you on a budget. So as long as it works in your budget, whether you utilize your first home benefits, great. If you don't utilize them, it's not the end of the world, because if you get an investment and that appreciates in more value than what you might have purchased as a first home, then that's also done its job too. So don't rule out an investment property. Yes, first home buy benefits are great, but if it doesn't work with your strategy, then the investment strategy strat is definitely the way to go. So just get that asset, and whatever way you choose, speak to your broker, get both sides. So when you ask for a scenario, ask for a first home, ask for an investment, and work your way from there. And you know, just watch the property appreciate itself and leverage that later on. So that's all for this video today. Hope you guys enjoyed it. If you want to leave any thoughts and comments or feedback, put it in the video below, and I'll see you at the next video.